I've started off with this look at the story behind Kenya Kobil and the fact that it's had Kenya's sole refinery saying yesterday it's terminated an agreement for processing fuel for the company. How has the market responded to this news?
So far we haven't seen a significant reaction, but I think we expect that the market over time will start to analyze the implications, because obviously it has significant implications on business going forward. Basically because it means that by law the company is expected to process at least 30% of its crude oil through the refinery, and the fact that it may not be able to do that would have implications in terms of business growth in the future. I think the other aspect that is also very important is also in terms of the confidence and the expectations and the participation of the company in future oil tenders. So for now, the market is still trying to absorb, because there's been a lot of discussion regarding arbitration and other discussions that have been revolving around solving the dispute. So within the next few days, we should be able to see a comprehensive market reaction once we are certain that what the outcome is.
Yep, certainly, because for now we've had Kenyan Kobil saying that it's put in place contingency measures to shore up its supply of fuel products in East Africa's biggest economy. The question is for how long those contingency measures would actually be enough. So let's move on to some other news making headlines there. We have Kenya's financiers really seeming to impress the market of late with the first half numbers. Housing finance joining that mix in yesterday's session with its 56% rise in profit. Your overall impressions of those numbers?
I think the numbers look fairly good, and I think it's a significant improvement. You can see that over the last few years, the organization has turned around in terms of revamping its branding and also in terms of raising capital. They were in a capital raising issue in 2008, and I think we're now seeing the dividends paying off. There still remains the challenge, of course, in terms of the capacity to mobilize deposits in terms of long-term deposits, because as you are aware, housing requires long-term deposits, and the company needs to be able to raise long-term deposits in order to effectively provide financing for housing. There have been some incentives that were in the budget speech early last month, and it is hoped that this will, in a way, play some role in enhancing the ability of the company to mobilize more deposits.
Yep. Well, the company has said that its loan growth is what's helped drive, the growth that came through this time round. Begging the question, in the current context, what is the NPL status looking like of this financier at the moment, where the tough economic climate has put many lenders under pressure in that regard?
I think in terms of there are still significant demand for housing in our market, and I think the fact that the company has been engaging in initiatives with other providers in the housing market has enabled it to be able to offer unique products that address some of the more specific needs of house buyers. And I think that has helped them in terms of, I have in mind firms like architectural firms and quantity surveyors, so that they're able to offer a fairly robust product to the end buyer. And I think that has helped them in terms of being able to come up with higher demand for their loans in terms of housing.
In terms of their risk mitigating strategies, though, Einstein, I mean, are you confident that their risk mitigating tools are effective enough in the current environment where non-performing loans will always, of course, pose quite a threat?
Yes, I think that, and that has also been a previous challenge that the company faced a few years back. But I think in terms of trying to address a lot of the key issues of non-performing loans, in our view, from what we've seen in terms of some of the financials, in terms of risk model and risk mitigation, I think there appears to be a much more robust mechanism that has been put in place to try and address the issue of non-performing loans. But I think we cannot totally ignore the fact that that remains an issue, and not just in the housing market, but even in the rest of the banking sector. But just to answer your question, I think we've seen a much more comprehensive attempt to address the issue of mitigating risks in the future.
Well, certainly for now, favourable interest rates is also a strong support factor for this company working to fuel demand. To what extent do you see borrowing costs heading lower in the longer term? Because to bear in mind here is that we have seen the introduction of information sharing amongst banks, and that's one thing that this system is envisaged to do, and that's bring down the cost of borrowing.
I think that's a very I think that's a very important development in terms of credit sharing. It's been a long time coming because I think it's been quite a while since the mechanisms were put in place to try and address the issue of credit sharing. And now that we'll be able to have, banks will be able to share information in terms of the non-performing loans, it should make it much more easier for them to be able, for the banking sector to be able to pinpoint risky borrowers, and therefore overall, over the long term, be able to address the issue of costs, the cost of borrowing, having seen a reduction in the levels of risk. So I think it's a very welcome development, and I think long overdue.